Welcome to the discussion video on Module 12, the inventory cost flow. So at the end of the module, we will be able to understand the concept of the FIFO, weighted average, moving average cost formula, and specific identification methods for this module number 12. So, under the concept of the inventory cost flow, ay i-discuss natin yung several methods of accounting for inventory. Because there are several system that works in actual practice and for us to be able to understand kung paano ginagawa yung computation on inventories na pinapresent natin on our financial statements. One of the inventory cost flow is the first in, first out method na more or less the methods na i-discuss natin on this module ay nadaanan mo na when you are in your cost accounting subject. So under the concept of the first in, first out method, it is a cost flow assumption that the goods first purchased are also the goods first sold. This results in the remaining items in inventory be accounted for at the most recently incurred costs. So dahil ang logic dyan, kung sino yung naunang ipinasok doon sa warehouse, dapat siya rin ang unang lumabas kapag meron ng sale. Therefore, kung yung naka-reflect sa financial statement mo na inventory ay, ang nire-reflect niya ay yung pinaka-recent na mga cost dahil ang matitira, yung ending inventory mo will be measured at the recently purchase cost. This method also results in older historical costs being matched against current revenue. So there is a disagreement between using the first in first out method because there is the tendency of yung violation of the matching principle. Kasi yung current revenues ay pwedeng na ma-match siya versus sa older historical cost. Okay, let us illustrate the concept of the first in, first out method using this assumption. So the illustration is, binigyan ka ng number of units, the unit cost, the total cost, and the sales in units. So on December 1, meron kang beginning balance na 700 units. Ang unit cost niyan, 150. 700 times 150 is 105,000. That is the total cost, beginning inventory mo, na naka-reflect sa iyong financial statement. So throughout the time, merong mga sale. For example, ito, 500 units ang nabenta. Bumili ka naman nung December 15, 800 units. Ang cost nun 200 per unit. Then, ang total cost 160. So, nagbenta ka uli ng December 20 ng 500 units. Purchase. Bumili ka ng December 31 ng 300 units at 300 per unit at 90,000 total cost. So, if you will look at this, the beginning inventory is 700 units. Sale, pag nagbenta ka, so 700 minus 500 is 200 units. Ito ay, this is a deduction. So 200 units ka na as of December 10. Bumili ka ng 800 units. So plus 800, that is 1,000. Nagbenta ka uli ng 500. So 1,000 minus 500 is 500. Bumili ka uli on December 31 plus 300. So the ending inventory is 800 units. So sabi dito, the ending inventory is 800 units. The problem is, paano mo i-account itong 800 units na to given that there is a changes in the prices from the beginning up to the end. So under the rule on the first in, first out method, kung alin yung mga unang items na nandun sa warehouse, yun ang unang binibenta. So the rule is, for example, itong 500 na to na binenta noong December 10. Normally, dito yan manggagaling sa items on December 1 kasi yan pa lang naman ang items mo dyan. So this is measured at 150 per unit. Nung bumili ka noong December 15 ng 200 per unit na mga inventory, then binenta mo ng December 20, the problem arises whether itong 500 ba na to ay anong price nito, ano ang cost nito, anong costing nito, based on your stock card, based on the the inventory cost flow. The rule on the first in first out, kung alin yung mga unang items yung unang ibebenta. So dito sa una, meron pang natirang 200 units dahil 700 units ang beginning, nagbenta ng 500, so may natira pang 200. So yung 200 dito sa 500 will be measured at 150. Then yung 300 will be measured at 200, yung kakabili mo lang. So on and so forth. So pumili ka uli dito 300, 300. So the question under this is, kung yung ending inventory, the measurement of the ending inventory lies on kung anong method ang ginamit mo. So look at the sample computation. Itong 800 units, i-dissect natin kung saan yan nanggaling. So ang 800, sabi yung ending inventory comes from the latest purchases. Kasi yan na lang yung natira. So kung titingnan mo, ang latest purchase mo is 300 on December 31. So ito yun. So ibig sabihin, yung 500 comes from the purchase at December 15. So yan ang breakdown ng 800 na ending inventory mo. So magkano mo siya i-measure? Di kung magkano siya binili at that time. For example, on December 31, yung 300 na inventory doon ay at 300 per unit. Yung 500 naman on December 15 is at 200 per unit. So 500 times 200 is 100,000. 300 times 300 is 90,000. So this is 190,000. So 190,000 is the cost of the ending inventory to be reflected. So ito yung i-reflect mo sa yung financial statement. So now let us look at how the cost of goods sold will be computed using the FIFO periodic system. So ang inventory beginning mo is 105,000. Saan nakuha yun? Ito yun. 105,000. Plus the purchases. Magkano ba ang purchases mo? I-lift mo lang. 160. Ito yun. And then 190. Ito yun. So that is 250,000. So inventory plus purchases is the goods available for sale minus the inventory ending. So magkano ang na-compute natin at the inventory ending? 190,000. So 355 minus 190,000 is 165, the cost of goods sold to be reflected in your income statement or the statement of financial performance. So now let us look at the first in first out method under the perpetual inventory system. So what's the difference between the periodic and the perpetual inventory system? Under the perpetual system, we use stock cards to determine the cost of the goods sold. So let us take a look with using the same example. Under December 1, the beginning balance is at 700 units, 150 per unit, and the total cost is 150,000. So December 10, nagbenta ka 500. So magkano ang cost niyan? Siyempre 150 because that is the cost. 75,000. So ang natira na lang, ang balance is 200 units. Bumili ka ng 800 units on December 15. So idadagdag mo lang itong portion na ito sa iyong stock card. Kaya napunta siya dito. Hindi mo siya pwedeng pagsamahin because of the difference in the prices. So nung nagbenta ka naman ngayon on December 20 ng 500 units, since first in first out method ka and using the perpetual inventory system which uses stock cards, mapapansin mo na yung 500 kasi ang sales on December 20, 200 ay galing doon sa old inventories. 300 ay galing doon sa binili on December 15. So, what is the effect on this? So, itong 200 na ito na nandito ay na-eliminate na dito. Ang natira na lang ay yung 800 minus 300. Itong 500, 200. Yan na lang ang natira. Okay, bumili ka na naman on December 31, 300 units at 300 per unit. So, idadagdag mo lang yung column na yon dito sa yung stock card. So, ayan. Idadagdag mo lang yan sa yung stock card. Okay. So, the question is, how do we determine the cost of goods sold under the FIFO perpetual inventory system? Gamitin mo yung stock card mo. Okay, so magkano na lang ba ang balance natin? So, using the stock card, madali mo siyang makukompute kung magkano ang cost of goods sold. Kasi pag tingin mo dito sa may column ng sales, kung tinignan mo yung column ng sales, you will just have to add yung cost ng bawat item. 75,000 plus 30,000 plus 60,000 is your cost of goods sold, 165,000. So that is the way on how we use the FIFO under the perpetual inventory system. The difference lies on the use of the stock card. Next, let's go to the weighted average periodic inventory system. Okay, using the weighted average method, the total cost of goods available for sale is divided by the number of units available for sale, which yields the weighted average cost per unit. The cost of goods available for sale is calculated as the sum of the beginning inventory plus the net purchases. The inventory cost is computed as the weighted average cost per unit multiplied by the ending inventory. So let us take a look at the sample. So same sample ito. Okay, parang na-splice ata ito. Itong 500 and 500, this is the sales in units. I think nagkaroon ng problem on the tabulation. But this is the same example. We are looking at the previous illustrations. So, dito na tayo ngayon sa may ending inventory, 800 units pa rin. So, the beginning in balance is 700 units at 105,000 total cost. There are these purchases. So, under the weighted average method, ang sabi dito is we get the cost of goods sold, cost of goods available for sale, and then we divide it by the number of units available for sale para makuha mo yung weighted average cost per unit. So, total cost of goods available per sale, paano ba nakukompute yun? And then the beginning inventory plus lahat ng binili mo or the purchases. So, in this example, beginning is 105,000, purchases 160,000 on December 15, and 90,000 on December 31. So, ang total cost of goods available for sale is 355,000. So, kuhanin mo yung number of units niya, 700, 800, and 300. That is 1,800. So, how do we compute for the weighted average unit cost? I-divide mo lang. 355,000 divided by 1,800, ibig sabihin, 197.22 is the weighted average unit cost of the goods available for sale. So, itong figure na ito, yung weighted average cost, will be used in computing for your ending inventory. So, since ang ending inventory in units mo is 800, you multiply it to 197.22, then you get 157,776 as your inventory to be reflected in your statement of financial performance or your income statement. Then, let's derive how we, inventory to be reflected in the statement of financial position ito. Because this is an asset. to be reflected in the statement of financial position or your balance sheet. Itong cost of goods sold, ito yung i-reflect natin sa income statement. So, how do we compute? The beginning inventory, 105,000. Ang purchases mo, 250 minus itong na-compute mo ending inventory na 157,776. Then, you will get cost of goods sold, 197,224 to be reflected in your income statement. Next, weighted average, the perpetual method. So, ito ay tinatawag din the moving average method. So, what is the difference between the two? Under the moving average method, each time na magkakaroon ng sale or purchase ay kinocompute natin yung items. Normally, kapag mapapansin mo when you are computing, kapag nagbenta ka, walang effect yan sa iyong unit cost. Pero kapag ikaw ay bumili or merong purchase return, doon magkakaroon ng effect sa iyong unit cost. How is it done? This is done by dividing the total cost of goods available for sale after every purchase and purchase return by the total units available for sale to get the new weighted average unit cost. Okay, we are looking at the same example. So dito na tayo sa illustration. So ito ang beginning balance mo, 105,000 ka pa rin dyan. Nung nagbenta ka ng 500 units, so nasa nanggaling yun dito pa rin sa beginning. So minus 75,000 ka dyan sa yung total cost. So ang balance mo na lang as at December 10 is 200 units and the cost is 30,000. Nung bumili ka ng item sa December 15, 800 units, ang unit cost ng binili mo is 200, total cost is at 160,000. So ano ang uunahin mong gawin? When you purchase, you have to add the total cost. Please take note of this kasi baka malito ka. Dapat ang unang procedure na gagawin mo is to add the total cost. Kasi itong 190,000 will be used in computing for your unit cost. So ilan ba ang actual units? Ilan ba ang actual units? 1,000. So, 200 yung natirang balanse. Bumili ka ng 800 units. So, 1,000 units ka na ngayon. Ang total cost daw niyan, pag pinagsama mo yung dati at yung ngayon, ay 190,000. So, 190,000 divided by 1,000, the unit cost now is 190. So, ito na ang bagong unit cost mo. Ngayon, kung yan na yung ending inventory mo, kung this is the end of the period, yan 190 per unit ang gagamitin mo na pang-multiply sa iyong number of ending units para ma-identify natin yung cost ng inventory mo to be reflected on your balance sheet. Since hindi pa yan yung ending, nagbenta ka na naman ng 500. So, 500, magkano ang cost ng 500? Dahil ito ay moving average, ang cost na yan is yung kung magkano ang weighted yung moving average cost mo dito. Kaya 190. So, 500 times 190 is 95,000. So, that is a deduction. So, magkano na lang natira? 95,000. Kaya mapapansin mo, kapag nagbenta ka, wala yung effect sa yung unit cost under the moving average method. Okay? So, bumili ka. Pag bumili, doon mayroong effect sa doon may effect doon sa weighted unit cost. Bumili ka ng 300 at 90,000. So, ano ang procedure? Sabi ko, i-add mo muna yung total cost niya. So, 95 plus 90 is 185,000. 185,000 divided by 800 is 231.25. So, 231.25 na ang bago mong weighted average unit cost. Okay. So, since this is the end of the period, yun ang gagamitin mo. So, using the this stock card, we look at how cost of goods sold is determined. So, madali lang namang identify kung magkano ang cost of goods sold dahil lahat lang yun ng sales mo. 75,000 plus 95,000 is 170. So, that is your cost of goods sold to be reflected in your income statement. Okay, when you look at how the moving average method is used, dito kasi automatic na meron ka ng figure ng iyong ending inventory, di ba? 185,000, yan na agad ang yung cost of ending inventory under the moving average. Under the sa actual practice in government accounting, ito ang ginagamit na method, yung moving average method, because under the electronic system, mas madaling ma-identify yung ending inventory ng items kapag ganyan. Naka ano na yan, pasok na sa isang system na automatic na kapag ikaw ay nag-issue or ikaw ay bumibili ng inventory items, ay nakasama na siya kaagad doon sa computation ng stock card. So, mas madaling i-pick up. But, since you are a student, dapat you know how moving average method is used in comparison with the other methods. So, ang i-reflect mo sa inyong balance sheet is 185,000 as your as your inventory. As sa iyong income statement naman, 170,000 as your cost of goods sold. Next, specific identification. This is one method which relates inventory valuation used to track specific items in inventory. So, simple lang under specific identification. Normally, itong mga specific identification na to yung mga few and large items. Halimbawa, malalaking items, machineries, ganyan. Madali lang i-bilangin, mag-conduct ng inventory count. So, kung magkano yung units on hand and the actual unit cost, yun lang ang i-reflect mo under the cost of inventory. So, ayun yung isang way, specific identification. Specifically, madali mong i-identify yun. These are a few and large, no, these are few and unique items. Kung malalaking equipment ito, nakakaunti lang within an organization na mas madaling i-count. Unlike kapag yan ay maliliit na items na homogeneous or pare-parehas. Yun ang normally sinasubject into the methods of FIFO, weighted average, and the moving average. Okay, next. The relative sales price method is a technique used to allocate joint costs based on the prices at which products will be sold. This is based on the philosophy that the cost is proportionate to the selling price. Okay, let's look at the example. Product XYZ are purchased at basket price of 3 million. Kung binili yan at basket price, ang sabi, for you to be able to allocate this, look at the sales price under the relative sales price method. Kung magkano mo siya bibilin kapag yan ay per item, yung product X will be bought at 1 million, Y at 2 million, Z at 3 million. Kuhanin mo lang yung proportional allocations nila. That is 1 over 6. Dahil 1 million plus 2 million plus 3 million is 6 million. Dahil basket price yan, bibilin mo siya, so normally yan ay may discount kapag binili mo ng magkakasama. So, dahil 3 million yan, hindi mo ngayon ma-identify kung magkano ang i-allocate mo kay X, Y, and Z. So, the philosophy under the relative sales price method ay yung cost is proportionate to your selling price. Kaya, ganyan ang computation. So, the allocated cost for X is 500,000. Paano na-compute yun? 3 million times 1 over 6. For Y naman, 1 million. Paano na-compute yun? 3 million times 2 over 6. Yung kay Z naman, 1,500,000 computed as 3 million times 3 over 6. Kasi kinukuha mo yung allocation ng 3 million across the products in the basket. Okay. So, I think That ends the discussion on the inventory cost flow for Module 2. I hope it helps you while you are studying this module. Thank you.